Have you ever wondered how to include vehicle expenses as a business expense? Is this deduction right for you as a business owner? It's a common question we hear from business owners every year, and we want you to maximize your business expenses and tax deductions, but we want to make sure we're doing it safely without IRS scrutiny. Welcome back to Business by the Books, the podcast that teaches you how to use your financials to manage your business. My name is Danielle Hayden. I am the founder of Kickstart Accounting Inc. and your CPA. And I've helped thousands of entrepreneurs make informed financial decisions for over a decade. Today, we're diving into the vital question: can I deduct my vehicle on my tax return? Is this tax strategy right for me and my business? So today we're going to learn three things: how to determine the right method for you and your business, how to track your vehicle expenses and communicate with your money team, and how to take back the power so you always know your numbers in your business. So if you're ready to save money on your taxes, maximize your deductions, and track them correctly, then stick around to this episode of Business by the Books. Now, for most of our clients who run online service-based businesses, you are using your vehicles less than 50% of the time for business. If you buy or lease your vehicle and only use it for business purposes, you can deduct the entire cost of operating and owning that vehicle. However, if you operate that vehicle for personal use, you may only deduct business expenses incurred when you are using it for business. I want everyone to really actually ask yourself this question: do you have a personal vehicle for personal travel? Are you using your vehicle for 100% business use? If the answer is yes, then I want you to go and talk to your CPA about the Section 179, bonus depreciation, and electric vehicle deductions that might be available for you. Today, I'm going to focus on the strategies for us who use their car both for personal and business use. This is really important, especially for us at Kickstart Accounting Inc. We work with so many business owners who are running online businesses or service-based businesses who are their primary source of revenue is not driving their vehicle around town, right? Our primary source of income is right here in our homes and on our laptops. So today we will focus on the strategies for anyone who is using their car less than 50% for business. The other point I want to mention before we move forward is that these are deductions. You are not getting any cash. You still have to pay the cash outlay for these vehicles. This will lower the amount you owe on your taxes or increase your refund. But please do not ever spend money just to take a tax deduction. I see so many tax influencers online who are encouraging people to go out and buy luxury vehicles to save money on their taxes. This might not be the right strategy for you if you are not using your business 100% for business, or if your business can't support the cash outlay for that type of vehicle. So if you use your vehicle less than 50% of the time for business, you have two options. The first option is mileage. The second option is the actual vehicle expenses. So we have two options to take advantage of the vehicle expense deduction. Now, please note that you cannot go back and forth. It's really important. The IRS says that we need to be consistent. So when you purchase that vehicle, you need to decide if you're going to take mileage or the actual expenses of the vehicle. So you have to pick one and stay consistent. You might choose to look at the previous year and compare what the mileage would have been. You're just multiplying the number of miles traveled for business multiplied by the mileage rate for that year, and compare that to the actual business expenses. Now note, you don't get to take 100% of those business expenses because you're not using it 100% for business use. You're only going to write down all those actual business expenses, and you're going to multiply that total amount by the amount of time you're using it for business. So no matter which strategy you use, you don't get 100% of miles driven or vehicle expenses. Now, mileage is a very fair and amazing tool for taking this deduction, especially if you're using a software like Mileage IQ. They do not sponsor the show, but I love Mile IQ. This is a fantastic software for tracking your mileage. And we find that the mileage is actually very tax advantageous for our clients. Now, please note that mileage is not for commuting. It is not driving from your home to your office. This is driving from your primary office to another office location. It's miles driving while transporting your business passengers or packages. It's trips from the office to supplies. It's trips from the office to supply stores, banks, post offices, restaurants, or meeting with clients. So this is very specific that it's only miles for business purposes, and it's not from your home to your office and back. I want to note a few other advantages of using miles. It does not matter who owns the vehicle. If you're driving your child's vehicle, your husband's vehicle, it does not matter who owns a vehicle. As long as you are commuting for business purposes, you can track and deduct those miles. Remember, you cannot throw a wrap or a logo on your car and then suddenly deduct all the mileage or car expenses. So I don't see this as often anymore, but I remember when this was popular, where people were putting their logo and those fancy car wraps on their vehicles, stating that it was an advertising expense. Here at KSA Tax Partners, we note that this does not make your vehicle 100% deductible and does not create your vehicle as an advertising expense. Okay, so those are the two types of ways that we can expense our vehicle on our return. How do we implement this based on our entity type? As an S Corp, you can use an accountable plan to reimburse yourself personally for the business use of your vehicle. Next week, we will be talking more about accountable plans, but just note that as an S Corp, the best way for you to take this vehicle deduction is going to be to create an accountable plan and reimburse yourself monthly for the expenses for the amount of business use of your personal vehicle. Now, this is different if you are an LLC. As an LLC, you claim this deduction on Schedule E of your Form 1040 rather than on Schedule A. You don't need to know any of that. I hope as a business owner that you are working with a CPA and you have a tax accountant who's filing your taxes for you. The reason I want to note this, though, is that as an LLC, it's important to note that you are taking this expense on a different form. You are taking this as a personal expense on a different form rather than on the income statement of your business. So as an LLC, you will submit those miles or vehicle expenses for your CPA to then enter that information onto the correct form. So how does the bookkeeping come into play for all of this, right? For 90% of our clients, they take mileage because their vehicles are not owned by the business and are not used enough for business. So remember, this tax strategy is not right for everybody. We recommend paying for your vehicle expenses through your personal account, right? It is not to be paid through your business account. As an S Corp, you will reimburse yourself through the accountable plan. So you will actually transfer the cash from your business account to your personal account based on the details that you have included in your accountable plan. LLCs, you do not need to reimburse yourself for those expenses. You will receive the deduction on your tax return. Now, I'm not saying as an LLC that you can't reimburse yourself for those expenses. You absolutely 100% you can. These are expenses that you are personally covering for your business. Anytime that your business is taking or using business Anytime your business is taking a resource from you personally, you can reimburse yourself for those expenses. But as an LLC, you do not have to reimburse yourself. If you want that cash to come from your business account, we will keep track of that on the bookkeeping side to then make sure that those expenses are available for the tax account. All right, so what is your homework and how do you implement this in real life? Step one, I want you to determine your entity type. You have to know if you are an S Corp or an LLC, because remember, as an S Corp, those dollars, that reimbursement, have to go out every single month. Step two, determine how much you use your car for business. Really, honestly, ask yourself, how much do you use your car for business? Step three, determine your method. Are you going to use the mileage method or actual travel or actual vehicle expenses? Step four, you're going to start the documentation process right now and communicate with your money team on a regular basis. We love our clients and we do everything that we possibly can to help our clients. We help make sure that everything is classified correctly and that your information is ready for tax season and it's ready to be used throughout the year to make business decisions. But we cannot document everything for you because we don't live with you. We don't live with you and we are not there with you day in and day out. So you are required as the business owner of your business to take responsibility and to document these expenses and then communicate with your money team. Send it over to your money team and ask them if this is the format that they want it in and have them help you hold you accountable, right? At Kickstart Accounting Inc., we are more than happy to hold our clients accountable. We email our clients on a very regular basis, trying to help them keep track of the information that they need in their business. So please use your money team as support. We'll close out with this last message. Don't ignore these important small tax deductions. Just because this might feel overwhelming, or you don't feel big enough, I want you to take what you deserve. It's important as business owners that we take advantage of these tax strategies. So go determine your entity type, determine which type of vehicle expenses you will take moving forward, and get to work tracking this information so that next year you don't miss out on this important tax deduction. Don't forget to hit like and subscribe. We will be back next week talking all about accountable plans.